Have you ever noticed that sometimes the RSI turns around at almost the exact same level again and again? It drops to a level, bounces, moves away, and later it comes back and reacts at the same level once more. Most traders think these reactions are completely random. But if you watch the RSI closely, something interesting starts to appear inside the indicator. Certain levels seem to control momentum, and once you learn how to identify these levels, the RSI begins to tell a much clearer story about what the market might do next with a higher probability. In this video, I'm going to show you exactly how to spot these levels and how they can help you read momentum more confidently. So stay with me until the end. RSI has support and resistance too. Most traders only pay attention to two levels on the RSI, the 70 level and the 30 level. These levels are used to identify overbought and oversold conditions, but in reality, the RSI reacts to other levels as well. If you observe the indicator carefully, you'll notice that the RSI sometimes stops, reverses, or bounces at certain areas again and again. These areas behave very similarly to support and resistance on price charts. Just like price respects support and resistance levels, the RSI can also respect specific zones where momentum repeatedly reacts. Think about it this way. Price shows us where buyers and sellers are fighting. The RSI shows us how strong that fight is. So when the RSI reacts at the same level multiple times, it means momentum is either being supported or rejected at that zone. And this is where the concept of RSI support and resistance really begins. What is RSI support? Look at this chart. The market is on an uptrend. Price is making higher highs and higher lows. This means the market is slowly moving up. Now watch the RSI during this move. You will notice something important. Each time the RSI pulls back, it often stops falling around the same level before moving up again. When this happens several times, you can treat the level as support on the RSI. This tells us something about momentum. Even when momentum becomes weaker, buyers are still strong enough to stop the RSI from falling below that area. In other words, momentum is being supported. And when momentum is supported, the trend usually stays strong. This is why experienced traders watch RSI support levels during an uptrend. These levels help confirm that bullish momentum is still strong. What is RSI resistance? Now let's look at the opposite situation. In this chart, the market is in a downtrend. Price is making lower highs and lower lows. This tells us the market is moving downward. If you watch the RSI during this time, you may notice something important. Each time the RSI moves up, it struggles to rise above a certain level. When this happens several times, we can treat that level as resistance on the RSI. So, what does that mean? It means when momentum tries to strengthen, sellers push it back down. Momentum is being rejected. And when momentum keeps getting rejected near the same level, it shows that bearish pressure is still strong in the market. Just like price respects resistance levels, the RSI can also show us where momentum has trouble moving higher. Strength of support and resistance with touches. Let me tell you a very important rule. In technical analysis, support and resistance levels are created when the price touches an area at least 2 times. But when a level gets 3 touches, it becomes more stronger and more reliable. Why is that? Because after 3 touches, the market is basically confirming that this area is a real zone of buying or selling power. And this rule works in both places, on the price chart and also on the RSI indicator. Just like price reacts to a level several times, RSI also reacts to its own highs and lows in the same repeated way. After many touches, the level can get weaker, but the third touch is usually the most trustworthy on price and RSI too. How to trade using RSI support and resistance. Now that we know how to identify these levels on the RSI, the next question is, how can traders actually use them in real trading situations? The first step is to identify the overall trend of the market. If the market is in an uptrend and price is making higher highs and higher lows, we focus on RSI support levels. When the RSI pulls back toward its support zone, for example, in this chart around the 40 level, and then starts moving up again, it indicates that bullish momentum may be returning. At the same time, we look at the price chart. If the price is also reacting near a support area or forming a higher low, this creates a stronger setup. This combination tells us that both price structure and momentum are aligned with the trend. At this point, we can enter a buy trade. Place your stop loss below the support level and set your take profit at twice the stop loss distance. As you can see, the price moves upward and hits the target. Now let's look at the opposite scenario. If the market is in a downtrend and price is forming lower highs and lower lows, we focus on RSI resistance levels. When the RSI rises toward its resistance zone, for example, here in this chart near the 60 level, and then turns downward, it signals that bearish momentum is still dominant. If the price also forms a lower high or reacts near a resistance area, it adds further confirmation to the setup. Again, this combination tells us that both price and momentum are reinforcing the direction of the trend. Here we can enter a sell trade. Place your stop loss above the resistance level and your take profit at twice the stop loss distance. As shown, the price drops and reaches the target. In simple terms, RSI support helps identify potential buy opportunity in an uptrend, and RSI resistance highlights possible sell opportunities in a downtrend. But remember, the RSI should never be used in isolation. The strongest results come when RSI levels are combined with market structure and overall trend direction. Golden summary. So to summarize, RSI is not only useful for the 70 and 30 levels, it can also form its own support and resistance levels. When the market is in an uptrend, RSI support levels can help confirm that bullish momentum is still strong. And when the market is in a downtrend, RSI resistance levels can confirm that bearish momentum is still dominating. By combining these RSI levels with price structure and trend direction, traders can better understand the strength behind market moves. Just remember, RSI works best as a confirmation tool, not as a signal on its own. Okay, that's it for today's lesson. If you found this lesson helpful, like and subscribe for more practical strategies. Comment below if you want a tutorial on a specific topic. Thanks for watching and I'll see you in the next video.